So the pre-packaged insolvency resolution process is in news. We'll see why it is in news, what is it a part of, what it is, what are the steps involved in it, and what are the impacts it has. So let's get started with the pre-packaged insolvency resolution process. So why is it in news? It is in news because it has successfully facilitated full settlement of operational creditors claims for 5 companies. So there is something which it does. It has done that successfully for 5 companies. We'll see what all it does. So there is some success it has achieved. That is why it is presently in news. Now what is the pre-packaged insolvency resolution process? So for understanding this, we need to first understand that India has historically faced a big challenge with respect to businesses or with respect to opening companies. So what are these challenges that we are talking about? So whenever you want to start a business or open a business, basically there are 2 challenges. One is the challenge of entry and the other is the challenge of exit. Now you might remember that the World Bank used to come up with a report named as the Ease of Doing Business report. Ease of Doing Business report. Now this report has been discontinued. It has been discontinued by the World Bank because there were a lot of concerns raised with respect to ease of doing business. It was said that World Bank has a biasness because some people have paid them to give them better ratings. So this report has now been discontinued, but earlier it was brought out by the World Bank. It focused on ease of doing business, how easy it is to do business. And one of the factors, criteria under this was how easy it is to start a business. That means entry into a business. This is one side of it. And India started doing quite well. From the rank over 100, we came into the 50s, round about 50s. So we were doing well. But one problem still remained very serious, is the exit problem. Exit problem as in when your business is not doing well, when you are not generating profits, rather you are generating losses, then you need to get out of that business, right? That is still an issue in India. So we don't have sort of hire and fire policy. You cannot fire the employee just like that, all of them or a majority of them. So what do you do? How do you get out of it? That is a big issue. And to address this issue, the government came up with the Insolvency and Bankruptcy Code. And Bankruptcy Code in 2016. So this is IBC 2016, that if a company is about to go bankrupt, they can suo motu on their own, declare insolvency and bankruptcy, and then the process of that would start. Under the framework of this IBC Insolvency and Bankruptcy Code, the pre-packaged insolvency resolution has come into existence. The pre-packaged insolvency resolution process has come into existence. Now, IBC itself was brought in to fasten the process of the insolvency and bankruptcy, the exit process. Now, the thing is, one size will not fit all, so different situations would demand different things. But then you can still have a pre-packaged sort of you have ready-made dresses. Instead of getting it stitched, which will take time, you have ready-made dresses. So whatever fits your size, you buy that. In the same manner, there might be certain cases which would be tailor-made and repetitive in nature. So for that, you can have a pre-packaged insolvency resolution process. That boss, this is how it is. You want to proceed in this manner. If both the parties agree, we'll proceed with the ready-made thing which is available, which will further speeden the process of exit. So that is the logic behind it. So it is nothing but mechanism for resolving corporate insolvency. It's a mechanism for resolving corporate insolvency, and it was added in the Insolvency and Bankruptcy Code 2016. So it is designed for faster, more efficient process. It will be faster, it will be more efficient process than other process. It minimizes disruption to businesses. Disruption to business. See, if I'm not doing well, every time it does not mean that I have taken a loan and I am not paying, does not mean that I have used the money somewhere else. It is possible that I am utilizing it for the intended use, but it is not working. I am not doing well. I need to change ship. I need to start some other business, do something else. So the sooner you help me, the better I can do other things as well. And to start other businesses, if I'm putting a lot of money here and it is getting wasted, then I won't be able to do something else as well. So this is a faster and more efficient process. Now, what are the steps involved in this particular thing? Preparing and negotiating resolution plan. Even before insolvency proceedings begin. So you need not wait for the insolvency proceedings to begin. You can prepare the plan. Remember the correlation of ready-made clothes. In the same manner here, before the insolvency begins, you will be preparing and negotiating the resolution plan. These factors, these facts would be important for your prelims. It would simply make, instead of before, they would write after, and then statement would be incorrect. Right, because it's before. Then implementing the plan immediately when the insolvency proceedings have started. Immediately when the proceedings start, you implement the plan. Now, when you are saying that preparing and negotiating a resolution plan, negotiating among whom? The two parties that are involved, the creditors, debtors, right? Then completing the entire process within 120 days. So just 120 days, okay, of course 4 months, but this is actually a very less time to address such a big issue of insolvency. Now, what are the key features of the pre-packages? It envisages a consensual process. Consensual process, let's say there is a creditor, they would want their money. There is a debtor who has taken the money, and other stakeholders are involved. So it's a consensual process. The moment you make the process consensual, it becomes faster. If there is no agreement between two parties, then intermediaries will not be able to address it, then it will go to court and both people will fight. But the moment you make it consensual, like I am agreeing to give this much amount of money, you agree to give me these many assets, then fine, end of issue. There is no need for any legal proceeding and it will be very swifter. So it envisages a consensual process. Okay, prior understanding among or approval by stakeholders. About what? About whatever the course of action you are about to take. That is why even before the proceeding of insolvency is starting, you are planning and negotiating and preparing things, right? So approval of stakeholders for the course of action to address the stress of corporate debtor. The debtor who has taken the debt would be under the pressure. So there would be understanding, prior understanding, and whatever approval is required would be taken before invoking the formal part of the process. So before going for the formality of it, documenting it, beforehand only consensus are tried to be created over here. Now, no requirement of court approval. To do this, no court approval is required. Planning, negotiating, coming to a consensus, no court approval is required for that. Rather, you are making the work of the courts easier. Okay, does not always require approval of the court. Wherever it requires approval, courts often get guided by the commercial wisdom of the parties. So if any approval is required and two people have already agreed, so the court does not have any as such reason to go against that and say something else. Okay, so it makes things very smooth and easy. Then further, outcome of the pre-pack process. So whatever the outcome comes, if that outcome is actually let's say approved by the courts, if that court has approved the outcome, then it is going to be binding on all the stakeholders. Okay, so let's say the court has given an approval on a particular thing, on an outcome. So if there is a particular outcome and it's by the court, so that will be binding on all the stakeholders. Before that, whatever you are planning, whatever you are negotiating, let's say the creditor and the debtor has come to the consensus also, right? And then the legal proceedings start. So in legal proceeding, whatever comes out by the court will be binding. Whatever was pre-decided, consensus was created, is not binding, because then the court has to still give a judgment. However, we have seen that the court gets guided by the commercial wisdom of the party. So whatever the consensus have been, that would generally be the outcome. But after consensus, if there is disagreement, so nothing is let's say binding. Even if the consensus was made, later on I may say something else and the other person may say something else. So whatever document was created based on mutual consensus will not be binding. But once the court gives a judgment, then that will be binding on definitely all the stakeholders. Alright, so this is about your pre-packaged deal. What is that all about? Let's recapitulate quickly. Exit process was difficult and it is still difficult. So for fastening that, insolvency bankruptcy code was brought in, and under insolvency bankruptcy code we have brought in the pre-packaged insolvency resolution process, which starts the planning, negotiation, everything before the process of insolvency has started. And the moment the process of insolvency starts, this gets implemented. There is no such requirement of the court for coming on to consensus, but wherever the court is required to enter, it gets guided by the commercial wisdom of the stakeholders involved. And once the court takes a judgment, then that judgment is binding on all the parties. Binding as in, of course, binding, there can be further appeal to the superior court, that's a different thing, but if not, it is binding to the stakeholders involved. So this is all about the pre-packaged insolvency resolution process. Important specifically for your mains exam, you can utilize this point in your answers, and the facts I talked about, remember them for your prelims. For example, before the insolvency process itself, the preparing and negotiation of the resolution starts before the insolvency itself. All these points need to be remembered for your prelims exam. Thank you.